Welcome. Probably gonna be a faster stream today. Just make sure, put on my mic a little bit, move it, trying to make sure the audio is good. Just looks like it might be a little bit low right now. I think that should be fine. Alright, but yeah, we're just gonna be doing a little bit of a faster stream today, I guess. Maybe like half an hour, 40 minutes, instead of like an hour and 20. But I'm gonna start off with SPAQ. Go over the new way I charted the harmonic or the bullish butterfly, and I think it looks a lot better now. It looks a lot more valid, and I'll go over that in a second. Other than that, we're gonna be going over Bitcoin, which pulled back at the resistance I've been showing on stream for a little while. And then if you want me to go over any cryptos or stocks, just type ticker in the chat, and I'll take a look at that as well. Thank you for showing up. I know this is not too much of a hype stream. There's not a lot going on except pretty red day in the market. So I know a lot of people are down some, or they're just sitting in cash or whatever that may be. Not a lot of profits going around. But I'm gonna get into that as well. I'm not too bullish on the market currently, like at all. But I'll do my overview of that as well. But before we get into all of that, yeah, Alex, hope you're doing well. You know, good times will come in the future. It's all about peaks and valleys. It's like waves, you know, there's ups and downs. You just gotta try your best to not be emotional, and then be able to make the most profit off of those ups, and then take the least loss off of the downs, or just take no losses off of the downs. But you know, that comes with time, and I'm sure, you know, it'll be good in time. So just to get started off with SPAQ, let me show you guys the new way I'm pivoted or charted the bullish butterfly harmonic, and this looks a lot better than the last one. In the last one, this X to D line was not a 1618. It was still in the valid range of basically where you want that to be in terms of how wide the pattern is. but it wasn't a golden ratio. And then today, after we broke the initial PCC, there was still a lot of demand that came in after you fell down like another 8% after the stop loss. So it was basically, you had the original PCC at 983 with the stop loss at 948. You went down to 948 like right around the market open, stayed around there for some time, and then you dropped all the way down to 880. So that stop loss definitely did help for about an 8% drawdown, and one could have re-entered there, whatever you decided or somebody else decided. There was a bunch of different ways to play it, and obviously it was not optimal by any means. But after you did drop down, you bounced back up, and the way that the demand came in, I always notice that usually when you have the bottom of a price range, it's very fast. Usually you don't stay at the bottom for too long unless it's like a major support. And obviously at these new all-time lows, there is no major support. So there is nothing, I know I just said that twice, there's nothing looking left. So there's no way to get horizontal support. But what you can use is Fibonacci, very useful in trading, and I've been showing that off in the last few live streams on how useful a lot of these different types of retraces are, especially when you don't have other things to look at on the chart when you're at such high or such low levels. But so yeah, basically, I was using, for the original one, I was using the second swing high because that was where like the dump kind of started. But I kind of moved the C point to the left over here, and you still have a 2618, which is what you need for the pattern completion zone. You still have that, but now you also have a 1618, which is like the actual golden ratio seen all across the universe. I know I keep on saying that, but it's crazy. So now from X to D, you also have that, which helps to show the size of the pattern. So this is a new harmonic. The new PCZ is exactly 933, but the way that a pattern completion zone works is it could bounce around 3% higher, 3% lower. So you kind of just have about like a 6% range, which is why you see this green box. That's the buying zone of this particular trade. And then the stop loss was obviously lower to the new all-time low, or what would be the new all-time low if we somehow broke 880. So your stop loss would be, or I guess it was 870. Your stop loss would be under 870 with the lower buying zone now. So yeah, today it also ran up like 10% after falling down to 880, which somehow with the divergence on the 4 hour, I really felt that it could happen, especially how quickly we got back over 9. So I posted it on Twitter, and then we went back up to test 10. Then when we got to 10, I put out another tweet saying we could see some resistance here because we just filled a gap, and it was our previous support where we closed the past 2 days. So then we got to 10, and then like I thought, we would have some resistance and fall back down, which we did, and now we're back in the buying zone of the pattern. Alex Trigg said, so what do you believe is going to happen post-merger? So I'm not sure if the merger is tomorrow, Friday, or next week, but it should be soon. I kind of just talked about this in a Twitter group chat, but I think if the merger happens on a green day in the stock market, I think we can have an 8 to 12% run. I do think that the ticker change from SPAQ to FSR is a very good thing. I think it's more than just a name change. I think it's a whole entire branding change, and I think it's a new beginning. And also, you're not gonna be a SPAQ anymore. You're gonna be an actual IPO'd company, Fisker. So I think that would be big. So in terms of like SPAQ trends, a lot of them ran up until their merger, had an okay day on their merger, and then the day after or the couple days after that just started dumping, and most of them have pretty much been dumping like ever since. But SPAQ kind of broke that trend, whereas leading up to your merger, you already have dumped like crazy. So if you're just playing the opposites there, again, this is just literally my opinion. This has no actual technical analysis backing. I'm just throwing out an answer for you. I would say that just since it's already been breaking the trend of most SPAQs, maybe you could get a decently sized 8 to 12% day if the general stock market looks good. And it truly did suck that the market took one of its biggest hits all year on the merger vote day and the original bullish butterfly pattern completion zone. But of course, I was updating live in the morning as that was all happening, trying to help people minimize their losses or strategize a new position. As I always say, never expect, always react. And when something that big happens, you need to react. However that may be, that is up to you. But yeah, this is a new bullish butterfly harmonic. The stop losses are lowered, but the targets are the same exact thing. That's because the A point and the C point, or the two swing highs of the pattern, never changed. So in terms of the targets, same exact thing, just obviously much lower entry and a little bit of a lower stop loss. Where do you see this in 2 years in your opinion? There's obviously a lot of variables that go into that. If the stock market's in a good place, then we don't have like a long recession with all the fundamentals going on in the world, and Fisker is if Fisker follows the plan to drop the cars at the end of 2022 and the revenue expectations are as good as they look like they will be, I think we could have $10 has already been up to $21 2 years from now if they have crazy revenue and they are one of the top dogs in the electric vehicle space. I think this could be a 4 or 5x, and I know I might sound crazy, but for most people's expectations, I would say that that's kind of conservative. But that's in 2 years from now, and a lot can happen by then, so don't quote me on it. But if you want to know why I am so bullish long term, I have a whole entire 30-minute SPAQ breakdown video on my channel, so you can look at that. I went over all the fundamentals and why I think that this is a very low risk, high reward trade in the long term, even though currently I've been very clear that the risk is high, and that is due to that's due to a number of reasons, including the shorts, including the constant selling, including the general stock market, including the elections, so many different things that I don't really want to get into right now. But I did go over those things in my full breakdown video on my channel. So yeah, that's the new bullish butterfly. What I really like is how the MACD is continuing to develop classic bullish divergence. It's kind of stalling out a little bit on these last 2 wicks, but I think that was mainly because he went up to test $10, and then from $10 you obviously had a big support resistance flip, which I expected, and then you fell back down. So yeah, you just want this MACD to turn to green on your 4 hour. If you're taking a shorter trade than the long-term trade on the daily, this would be it. Basically your target is right around that 50% retrace of the whole entire downtrend, using the bullish butterfly on the daily and the potential classic bullish divergence here. And for the past few days I only had a supply line, but then today I was kind of messing around, and since you have 3 touches, I made like a little demand line, because over here lines up with over here, and then over here lines up with over here. But that's honestly not the best demand line. I kind of just did it to make it look better, so don't care too much about that demand line. Do you know about the November 15th catalyst coming? I think that will definitely move things in a positive way. I do know about that. It's supposed to be some sort of engineering event or something like that. I can't really say anything about it because I don't know anything about it, but I do think that Fisker is not just going to say things like that if they're not important, so I think it will be important. I don't know if it will drive up the price on that date if it is a good announcement, but I think it'll just add to the long-term catalyst of Fisker, because as we saw on battery day of Tesla, I believe it was down a few percent on the actual battery day where they revealed their new battery technology. So it may just be like a sell the news event, but in the long term it could be good, because after battery day Tesla did go up a little bit, even though it did not go up on battery day. Question on the bullish butterfly, why isn't the last point at the wick? Why isn't the last point? What do you mean by the wick? I'm not sure what you mean by, like, yeah, I'm a little bit confused what you mean by like the current daily wick or something like that. Basically the way the bullish butterfly works is you find the first 3 points, which is the X, A, B, and then C. So after you get the X point, the A point, the B point, and the C point, and all of those numbers are the correct Fibonacci retracements, you go from your C point down to a 1618 or a 2618. Obviously we're much lower than a 1618, that was probably somewhere around here before I even noticed the formation of the bullish butterfly. So I went down to the 2618, and that would be at 933. Aren't you going wick to wick on all points? The most current looked as if it was the candle body. So the D point, you do not, the D point comes before the price action, if that makes sense. Like, let me just try and do an example for you. Let me probably do it on a different chart. I need a newly IPO chart. So let's use, I'm looking for a SPAQ, I guess. Let's use VLDR. Alright. So this is a harmonic for education. You have your first point, then you have your second point, then you have your third point, and then you have your fourth point. After you have all these points, then you go down to either your, I'm trying to find where it would be. Alright, let's just say that's your 161. Then you go down to your 161. And if you break that 161, you go down to your 261, which is where SPAQ is at. This is not a valid harmonic. I'm just trying to draw it for you to help you understand. Like, these Fibonacci points are not an actual harmonic, but I'm just showing you. So basically, just to do one more time, you chart the first point, and then you go up to a swing high. Then the price comes down a bit. Then the price goes back up a little bit. And then when you're at this point of the first 4 touches of the harmonic, before the price even drops down, you can get the target, which would be like the 2618 right there. Perfect. So you have the X, then the A, then the B, then you're currently at the C. Alright, let's say this is SPAQ before the dump. This is SPAQ at $15. When it was at $15, if you noticed those 4 touches, which I personally did not, you can target your 1618 and 2618, and then you want the price to get down to that. So basically the final point of the harmonic comes before the price even gets there, because the final point has to be a 1618 or a 2618. Unfortunately, Thinkorswim doesn't have harmonics. I've tried some scripts, but none of them seem to pick it up. Yeah, I use TradingView. There's a bunch of different platforms that have their own charting patterns. TradingView just has pretty much everything. And if you get the premium, you can have like unlimited, not unlimited, you have like a high amount of alerts you can set up, a bunch of indicators you can use. If you want a link to TradingView, my link is down in the description, and I think that'll literally get you right up to the sign up page. You can sign up for free, and it literally has everything. So yeah, that's how the harmonic works. So yeah, that's an updated view of the bullish butterfly, 4-hour bullish or 4-hour classic bullish divergence is something to be happy about in this dark sea of red. So yeah, if this MACD can cross over and go green, I think it'll definitely help out the bounce off of the pattern completion zone. Any idea what's up with VLDR and Rocket? Gonna be back holding them for a while. Rocket fell under support. Rocket looked real good. It looked real good. Right over here. You had classic bullish divergence on your 4-hour, and you were literally right about to go green at the end of yesterday, and you made a double bottom at the bottom of range, which was also right over your previous support. So it literally had everything lined up. You even had RSI, classic bullish divergence. And on your daily, you had classic bullish divergence, even though I don't have it charted. So it looked great. But then, of course, the market took a hard hit today. and it took pretty much everything with it, minus a few things that had good earnings and then just some other stuff that stood out, but most things did drop. And that's what happens when you have outside catalysts and stuff like that. Things like this happen. That's why you always want to have stop losses, especially in times like these with all the fundamental catalysts and the technicals. And then, so that's the rocket, and then VLDR. VLDR, I kind of just said that really fast. It's still fine. You're right back in your buying zone. So for now, VLDR is good. Of course, you want to have a stop loss because you never know what can happen. But currently, what VLDR is doing is giving another buying opportunity for the trade. You still have classic bullish divergence. You still are out of the falling wedge and you're actually retesting the breakout right now. Still in the buy zone that I made, and you're still 50 cents over your stop loss of the trade. So could the general market pull VLDR with it if it goes down? Absolutely. So you know, you have to make your choice on how you want to play it, because when the market goes down, all types of trade setups get ruined, and that's just how it is. So it definitely makes technical analysis a lot harder in times like these compared to like midsummer this year. Like midsummer this year, every time I was charting something, it would play out, like literally probably 95% of the time. In the last month, about 80% of the time I chart something, it's been playing out, which is why I always say nothing is ever certain, and especially in times like this. The closing today was somewhat disappointing. Was hoping to close at 10 for a hammer candle. Still seems weak. Any idea what the market cap will be? From my understanding, it won't be what SPAQ is now. I'm going to be straightforward. I am not too sure about the market cap. I don't think it matters as much as some people think it does. You're just looking at a company that has a high growth potential, and I wouldn't place too much importance on that right now, especially in the very early stages. And then in terms of the close today, of course it's not good to close low, especially when you have a 10% run. But yesterday and today you did have 10% runs within the day. So I'm not saying, especially if you're in these long-term trade setups, I'm not saying you should be playing those 10% jumps. I think those 10% jumps are mainly just people that are down a lot trying to get out and lower their losses as the float is changing. So I think the more times we do that, especially at a pattern completion zone while still developing 4-hour bullish divergence, at some point that 10% run is not going to shut off, and it's not going to give away all the gains. At some point that 10% run is going to turn into something much greater. Because if there's anything I can promise you about SPAQ, is that it will not always be in a downtrend. You know what I'm saying? At some point it has to reverse, and there's a higher probability that it will be sooner rather than later. But there is of course risks. So yeah, that's the whole entire SPAQ breakdown. I am talking about risks currently, and I have to talk about risks. I'm never going to be a blind trader. I'm never just going to be telling people they should buy something off of no reasoning. Every single thing I do on the stream has a reason behind it, and it has, you know, so many years of education into technical analysis behind it. I'm basically the middleman of technical analysis and you guys, if that makes sense. I'm just converting the technical analysis over and trying to teach more people about it, or just show my opinion about it. So in terms of risk, let's look at the S&P. The S&P had an inverse head and shoulders over here in this area, and around 3370 I put out a tweet saying it looked good. You also had classic bullish divergence at the time, and it ended up running to the second all-time highs. And when you were at those second all-time highs, I noticed something else. You had daily hidden bullish divergence. See, you were right up here, and you were starting to wane on momentum. And since then, the S&P is down about 7%, and that's an index, so just imagine how many other things fell down a lot more than 7% that are in the S&P. and pretty much most of the indexes were showing this hidden bearish divergence. If we take a look, QQQ, or the tech index, was showing the same exact thing before it fell back down. Same thing with the Dow Jones, I think, and then same thing with just a bunch of different indexes were all showing hidden bearish divergence. And they still are. There is no signs of a major reversal coming anytime soon. And you even broke under the 7863 retrace and the 3307 gap fill. So there's not a lot of support on the S&P until about 3233. So the general stock market does not look great, and you need to keep that in mind for every single one of your trades. You also literally have the elections in 3 trading days. There's 3 more trading days left until the general election. You have COVID cases rising, and you have pretty much a certainty that the stimulus will not be coming out before the election, but it could come out after the election. So, I mean, just that whole entire debate, you know. What is this song? I don't like these songs. Let me try and change it up. So yeah, the general stock market does not look great. I don't think that can be denied right now. In my opinion, you have 3 trading days left until the elections. I think 2 of those trading days will be red, and I think 1 of them will be green. Because I do think with this massive selling, there is going to be people trying to buy the dip. And that's just what you have during corrections. You have like, let me try and draw it. During corrections, you know, you go like this usually. You don't just go like that, right? So I think in the next 3 trading days, we're gonna have 1 green one. And again, this is not me being super specific. This is just my personal opinion based off of what I've seen in other downtrends. So I don't think we're just going to be dumping for the next 3 days. I think we're going to have 1 not super bullish day, but I think we're going to have 1 okay day. And what I'm hoping for is that okay day, or potentially good day, will be the same day as the SPAQ to FSR ticker change. But yeah, overall, there is really not much support on the indexes, and more specifically the S&P, for a little bit, for maybe another 2%. So there is more downside in the short term, and then in the long term, there is a lot more downside because you also kind of double topped over here with the hidden bearish divergence. So take caution of that. And can we get a reflexive rally? Maybe. I would say in terms of the next 2-3 months, there is a 60% chance it'll be bearish and a 40% chance it'll be bullish. But I think what comes with that is I don't think every single sector is going to be bearish. You know what I'm saying? I think a lot of tech companies are way too overvalued, so I think a lot of tech companies will pull back. I think the electric and renewable sector will be okay, especially since a lot of the electric sector has already been beaten down quite a bit, and the fact that both Donald Trump and Joe Biden are supportive of the electric sector, which they said in their first debate. So I think the electric sector will be good. I know I said technology might not be great, but I think the cloud computing sector of technology will still be fine. I just think like social media and e-commerce might take some dips after the crazy runs they had this year. And then in terms of like retail and stuff like that, I'm not too sure. I could see it going either way. They're already crushed, and if COVID cases are rising, it can make things worse for them. But from a value standpoint, they are at lower levels, but who knows? It might just take longer for them to bounce if they do. It's just weird times, and it's pretty much impossible to predict exactly what will happen. So take it as it goes. React, don't expect. So that's pretty much the rundown of SPAQ and the general market. If anybody has any cryptos or stocks they want me to go over, just drop the ticker in the chat and I'll make sure to go over that. until then, I actually want to go over Bitcoin, so I'll just be looking at the chat if anybody requests anything they want me to look at. And yeah, Bitcoin at 10,800, it broke out of the pennant, which I called. When I call it, but I posted it. A lot of people were also posting it back then, and since then it's been a crazy run up. You had Square buy like $50 million. You have PayPal integrating it into their system, and it's just been on a nice run. And you broke the 13,200 resistance, and then you went right up to the 13,900 resistance, and that is currently where you reversed. So now you are back testing the 13,200 resistance on Bitcoin. In terms of the daily, there's not much on the oscillators. And then on the 4-hour, you did have hidden bullish divergence, which kind of manifested from 13,000 to 14,000. So that hidden bullish divergence kind of played out for about $1,000. And then you fell back down, especially today, a decent amount of correlation with the general stock market. And now you're just retesting 13,200. So I think if you hold above this long enough, you can run back up to 13,900. But if you fall under that, you might be headed back down to maybe 12,700. So I think really just depends on what happens at this level for Bitcoin. So it's not terrible. And then in terms of like the macro, you're just in a super long uptrend, like all the way from March, crazy uptrend, and nothing is currently implying a major reversal, although you definitely might get some pullbacks. So be wary of that on Bitcoin. And yeah, I don't know if there's too much to cover right now. Just everything is currently at a high risk in terms of the whole entire stock market. But I do think in the next 3 days we will have one day where you have some relief rally going on. So who knows when that can happen, but I do think bids will come in before a major downfall, if there is a major downfall. So just watch out for that. And I think that just might be it for today. I don't want to be putting out too many analysis when things are so up in the air. Remember, cash is always a position, so if you want to minimize your risk, you do not have to trade. Nicholas, yeah, you did. I can go over it one more time real quick, but right now I'm just talking about risk management and how 50-50 the whole entire market is right now. And no asset in the stock market or in crypto will be safe, or will 100% be safe if some big selling occurs. So just be careful. I'm not saying anything's gonna crash. I'm just saying it's a high risk area. So yeah, let's go back to SPAQ. If anybody has any things they want me to look at, I will take a look, but I'm probably gonna be running it for like another 10 minutes and then get some sleep tonight. I've been sleeping like 6 hours a day for the past 2 weeks, so I don't even know. But yeah, SPAQ, you have a more valid bullish butterfly harmonic if you anchor the C point at the real swing high rather than the swing high before the dump. So that pretty much allows you to have not only a 2618 on your B to D, but also a 1618 on your X to D. So that looks good. Sleep for the week, yeah, I mean, bro, I just feel like, I don't know, my energy's been so off lately just because I haven't been sleeping too much. So I'm trying to get my sleep schedule a little bit fixed, especially so I could be more productive during the day. But that's besides the point. Yeah, this is your new look at the harmonic with your new PCC at 933 with the buying zone of about $9 to $9.50. And what can really help out a bounce off that PCC is not only the ticker change, but also the 4-hour classic bullish divergence that is maybe 2 or 3 candles away from being confirmed if the stock market doesn't take another big hit, or if we don't have some sort of weird selling like how we have been seeing for whoever knows how long. Where did the change in this pattern come from the last version of the harmonic? Alright, so the first version of the harmonic, I'm gonna see if I don't really, actually I could just probably do the undo button. So this was the first, don't mind that for now. This was the first harmonic, where that was your C point, and then your D point was higher at around 983. And the reason for that was your swing high before the dump. A swing high is just basically the general area you were at before a reversal in price. So you had a swing low at this point, a swing high at this point, a swing low in this point, and a swing high in this point. So this was the original C part of the bullish butterfly. And then after you get that C point, you go to your 2618, so you just drag it down. And your 2618 was $10, no, not $10, it was $9.83. And I charted that when the price was $10.33. Then it went down to $9.83 and then bounced back up to $10.80. So the first time it tested the original PCZ, it had an immediate 10% bounce, like literally the next day. And then you had selling occur again, and it fell under the PCC, it fell under the stop, and then after it hit the stop, it fell down another 8% to $8.70. So that obviously wasn't great. But then off of 870, you immediately whipped back up, and you also had a decently large gap to fill since you gapped down at the open. So there was definitely some signs alongside the 4-hour MACD, which still looks like it's heading towards positive, at least for now. So I was still thinking, like, even though you did get stopped out and you went down 8%, that was a new buying opportunity. And what if I'm looking at this harmonic the wrong way? Because typically that's not what happens at the pattern completion zone. So I was thinking, instead of using this C point or this swing high before the dump, what if I bring it over here, which was actually the swing high? You know what I'm saying? This was really the highest point you had before a dump. So I moved over the C to here, and then I brought down, so now you see that I moved the C. This changed from its 2618 to 244. A 244 is not valid really, so I'm bringing it down to the 2618. Same type of thing. Let me just make it perfect. Hold up, because I don't actually, wait, I could just do the undo button. I'm just fixing it right now. Alright, maybe I can't. Wait, alright, there we go. Perfect. So yeah, then when I put it over here, I had to readjust the D point to get this number to be a 2.618, and that came out to 933. And a bunch of times, or about 3 times, you came down to like the 935 level. You bounced back up to 980 today, and then towards the end of the day, you fell back down to close at 915. But you still are in the general PCZ area, and you're actually kind of at the lower part of it. So in terms of this specific trade, which is obviously not financial advice, anything could fail, especially with the stock market being this risky. You have to choose your risk. I cannot choose that for you. If you want a higher stop loss, you want a lower stop loss, if you want to just be in cash, you have to make that choice. I'm just conveying to you what technical analysis usually does, with a higher probability of playing out, but not a 100% chance. Wait, what the hell? I'm just trying to line up my target. Should I just, because the target's already there, I'll just remove that for now, whatever. But yeah, that's your new 2618 or pattern completion zone at 933, but the real buying zone is between $9 and $9.55, or at $9 and $9.50. And regardless of this, I think from a fundamental standpoint, you're going to see much higher prices in a long-term scenario. But if that 4-hour divergence can develop, it could be sooner rather than later. Can you show me how you recognize the bullish divergence? I'm still pretty new on charts, but you gotta learn more. Yeah, so course video number 8 on my channel. I have a free course on how to trade from beginner to advanced. the last one goes over oscillators and divergence. So if you want like an in-depth look at that, it is on my channel. But just go over it real quick. Basically what divergence is when the price and the oscillator are doing the opposite thing. So as you can see over here, you've been going down in price. You've been making lower lows. So you had your first low right over here, and you can call that a swing low because as you see after that low you went up in price. And then you have not confirmed a swing low yet, but you are at a lower level, and there's obviously no chance your low can be higher than that because you've already broken that low. But at the same time that you're making a lower low, you made a higher low on your oscillator, on your MACD. From here to here, you made a higher low. Now you do have this little thing in the middle, but it's just pretty small. It's not really that precise or clear, so you don't really have to count like little islands like that most of the time, unless you have no other choice but to. But as you can see, you have a very clear island over here and a very clear island over here that is much lower than this one. So when that turns back to green, where you see this little green island, or if that turns back to green, you'll have confirmed 4-hour classic bullish divergence. And there's pretty much 4 different types of divergences if you don't get into the classes of divergences, which gets even more confusing. But just to show you a different way, you can also have bearish divergence. So this is actually hidden bearish divergence, but as you can see from this high over here to the high over here, you made a lower high on price. While you made that lower high on price, on your MACD you made a higher high. As you can see, this is your first high and then this was your second one. So the oscillator was doing the opposite thing of the price, and that shows buyer exhaustion. If you have bearish divergence, it shows buyer exhaustion. If you have bullish divergence, it shows seller exhaustion, because it's pretty much showing that at the opposite of the price, the moving average convergence divergence, or your MACD, is saying that the momentum levels are different than the price. But if you want to like actually learn about that in a better way, go watch course video number 8 on my channel. That's just my quick little rundown on divergence. I always say 4-hour bullish divergence is probably the first thing I look for on most of my trades. It is one of the most reliable indicators I've used throughout my trading career. That has worked out a lot. It really does work out a lot. I could literally show you so many examples off the top of my head. If you see over here, this is Peloton. It's been absolutely insane. You had hidden bullish divergence on Peloton, which pretty much means you had a lower level of momentum, but you made a higher high on price. As you can see from here to here, you had a lower low on momentum, but you had a higher low on price. And then what happened after you went back to green? You went up again. So that's another example. I can for real show so many examples. I was just showing the Bitcoin one. You had again hidden bullish divergence on Bitcoin. You started over here, and then from 11,100 you went all the way up to 13,000, and then eventually 14,000. Like, it's literally everywhere. It's very useful, quite frankly, and in both directions. If you have bullish divergence or bearish divergence, it is one of the more reliable indicators. And you cannot only have divergences on your MACD. The MACD is just a lot clearer, but you can also have divergence on your RSI. For example, as you can see on your RSI, you made a very clear lower high of relative strength. From this high to this high, you made a lower high, and while you were doing that, you made a higher high on price. So then what happened? You went down in price. You had classic bearish divergence. So let me make that red. You had classic bearish divergence over here, and then you went down in price. So not only could you have used divergence to see the rise of Bitcoin with the hidden bullish divergence, but you could have also predicted this pullback because of the classic bearish divergence. So divergence is extremely useful and one of the most reliable indicators there is. Nicholas says, I definitely need to learn more. I'm down pretty hefty on SPAQ. So I have another account that I'm using to learn trading. Knowledge is power, man. I was not at all a profitable trader when I didn't understand what I was doing. I was just thinking all you have to do is buy low, sell high, and eventually you're going to make so much money. But as I'm pretty sure all of you know, it's much more complicated than that. And then when I spent a year of my life learning literally everything I'm talking about, I finally was able to start creating a lot of profits, and it got to a point where I became confident enough in my own abilities to start sharing charts and stuff, and a lot of them have played out. Thankfully, obviously not all of them play out. Nobody can be perfect, otherwise you would be a multi-trillionaire. But I'd say 3 out of 4 of the trades work out that I posted on my Twitter. And then again, if you use good risk management with that 1 out of 4 trade that doesn't play out, if you had a good stop loss on it, it really doesn't matter too much compared to your 3 winners. Which is why I always tell people, if you have a bad trade, don't think it's all over and you're never going to make money trading again. You just have to find a new opportunity, because you can never be perfect in trading. And I'm not perfect and nobody is perfect. But if you can understand how to use probability, you don't have to be perfect to make a good amount of money trading. But that's just my little rundown on risk management. Hope the divergent stuff helped you out. And just as I'm sure a lot of you are hoping, I also hope that we have a green day on SPAQ. But I have my risk thought out. I understand the risk that I am in, which is why I've also been talking about it very clearly. There is risk, and there always is risk. It's just how much risk you want to tolerate. So also still oversold on your RSI. So for sure that'll come back up in time. The question is how much time, obviously. And I think the best indicator you have right now that is pretty much saying you're going to have a rise in price sooner rather than later is your 4-hour classic bullish divergence. That's unconfirmed but also almost confirmed. Hey, thank you for the support, man. Hope the videos help you out, and it means a lot, bro. Thank you. But yeah, guys, so that is SPAQ, that is Bitcoin, that is VLDR. I think I went over one other thing. I went over the SPX, or the S&P 500. And yeah, I think that was a pretty educational stream, and I went over probably the more popular assets that are requested on my stream. So pretty happy about that. I'm actually gonna go get some more water, but if you guys have anything you want me to analyze before I turn on the stream, just drop it in chat right now, and once I'm back I will analyze it. If not, I'm just gonna sign off and see you guys tomorrow. But yeah, I'll be right back. If you want anything to be analyzed, drop it in chat right now. Alright, we are back. And we got Microsoft in the chat. If you guys have any... Dude, when I start talking for so long, I say this every single day, but I just start messing up my words, man. Come on. Microsoft. So Microsoft had their earnings. I believe it was today. Let me see what that was like. So I believe they beat earnings today. If I'm mistaken, please let me know. But it looks like they did beat earnings today. In terms of the chart, obviously you've had a crazy run up. And in terms of divergence, you could create classic bullish divergence if you never go lower than this on your MACD before reversing to the upside, and pretty much the same thing on your RSI. But in terms of a pattern, it does not look too great. It looks like you have, it's not a textbook head and shoulders, but it's definitely head and shoulders like stuff. And then your neckline would be, say what, like right here? Yeah. So if you fall under 196, that is a head and shoulders, which is a bearish pattern. So you definitely want to hold 196. If you don't, it could be pretty ugly. And then in terms of support, 196 is a support. Other than that, you could also find support at 187, as it used to be a resistance of yours. And actually, if you drag it back to here, as you can see, like this whole entire like 190 to 187 range, like that $3 range, could be a support area. But it's a pretty big head and shoulders. Like the way to target a measured move of a head and shoulders is you go from the highest point, or the head, all the way down to the neckline, then you copy and paste that at the breakout point. So a measured move of this head and shoulders will put you all the way back down at 160. I'm not saying that's going to happen, you don't always hit the measured move, but that's just what the technical analysis textbooks will tell you. And then the opposite for an inverse head and shoulders. For an example of that, I believe I have one right here. Yeah. So the measure moves don't always happen. This is crypto, so it's like a whole entire different market. I'm trying to think of a inverse head and shoulders that did play out that I can remember off the top of my head. Oh yeah, I know one. If you look on this chart, on the 4-hour, you had an inverse head and shoulders, and you've obviously since then broke the neckline and gone up a lot more.
What this is saying then is,
so yeah, inverse head and shoulders is the bullish scenario, but currently this is the head and shoulders, just a regular one, so it is decently bearish, so be cautious of that. In terms of the daily, not too much of an edge, it pretty much just looks the same. So I would say the verdict on Microsoft is you want to hold 196. If you don't, things could get pretty ugly. And if you do break 196, you definitely also want to hold 188, but at that point you're already going to be down more than 10. No, 20. No, you won't be down 10% there, but you're going to be down some. And yeah, it doesn't look too great, if I'm being honest. Not really any bullish factors I see currently. I think you also broke like an upsloping. Yeah, I mean, you just broke under that. So yeah, it doesn't look too great. That's Microsoft. They had a good earnings, so I believe they had a good earnings. I'm not sure. That's just what I saw, but obviously I don't think the price is reflecting that. Let me see what price it is sitting at after hours actually. $203, so pretty much the same exact price as what TradingView is showing me. So yeah, Microsoft does not look too good. It's just a part of that QQQ or tech index. And like here you can see you broke out of the head and shoulders, but you didn't get all the way up to the measured move because you created hidden bullish divergence on your daily, where you had a lower high in price with a higher high on your MACD. So things like that can prevent you from reaching a measured move. So that's why you have to look at all the factors on a chart. But yeah, the QQQ is just selling off with this daily hidden bearish divergence, which is the QQQ is just a tech index if you don't know. So yeah, tech, be careful. I don't think all tech is going to continue pulling back, but I do think definitely a good bunch of companies are overpriced right now in the tech industry, as they've already had just insane rallies this year. Vastly, I think. So TradingView is saying they had a bad earnings. TradingView is sometimes off, not usually, but just sometimes. I'm not sure. Obviously, Fastly, crazy gap down. I think they had like a lower price target or something. I'm not even too sure, but absolutely got demolished, and you're under the 74.60 major support. I'm just gonna be doing a rundown of a few charts. Thoughts on VLDR long term, aside from technicals, only have 200 shares but $18 average. Quite frankly, I don't know too much about VLDR or Velodyne fundamentally. I know that they are a, what's the word for it? It's like a laser graphing. Oh, LIDAR. Yeah, it's right there in the name. LIDAR, or LIDAR, however it's pronounced. So they provide like laser mapping for electric vehicles, warehouse supply, stuff like that. So I think their technology will be used by companies in the future, or even just consumers. But currently it's just been beaten down, and it finally got to a point where the chart looks pretty good, like genuinely. But the issue is your MACD, after you confirmed classic bullish divergence, is already starting to wane on momentum, and that is probably unfortunately due to the fact that the general stock market is pulling back before the elections, and with the COVID cases rising, and with the hidden bearish divergence on pretty much all of the stock indexes. So that can literally take anything with it. Even the good looking trade setups are not are not safe. There's a better word to use than safe, but not protected. I don't know, not protected from just the whole entire stock market pulling back if it continues to do so. But in terms of just the technicals, you're back testing the breakout, the falling wedge, and you're back in the entry zone. So yeah, if the stock market was not as risky as it is right now, this would be a good buying time for this trade. But the stock market is pretty risky, so I don't know. It's your choice if you want to risk that right now. But if it does bounce off of the retest of the breakout and gets back over that VWAP, or not VWAP, I have the 200-day on right now. If it gets over the 200-day moving average, which it just fell under, it could look a lot better. You just want it to bounce again after it fell back down, so be careful of that. That's VLDR. Rocket, I went over that before. This is UVXY, or a volatility index. It broke out of this like triangle, similar to how SPAQ did a couple weeks ago. and it dumped as the stock market was rallying up. And then today with the stock market crash, it went up 21%. Over time, the UVXY is just like if you were to hold this thing historically, you would have just literally lost everything, dude. This thing, oh my gosh. Wait, what? Oh my, does this ever, is this like infinity? Am I just tripping right now? Alright. Alright, I apparently do not understand how this works. In 2012, what the? Yeah, so never hold the UVXY for long term. It is just always in a downtrend. But on days like this in the stock market, it is probably one of the only ways, aside from shorting, to make a good profit. But whenever I have traded the UVXY, I always just day trade it. I never hold it overnight. So yeah, like if I see the stock market being bearish on low time frames, I just day trade the UVXY. But I haven't done it in a couple weeks. But yeah, you gapped up, had a crazy day. It's hard to do TA on this because this solely depends on how the stock market does. So basically the TA for a volatility index is the stock market looking bearish or volatile. But yeah, so UVXY, DraftKings, another Head and Shoulders. And since it broke the neckline, it's just been dumping. Yeah, does not look great. Your neckline was all the way, or your breakout the neckline was $48, and now you're at $38. You actually have classic bullish divergence on the 4-hour. So that's something DraftKings has going for it. Let me take that off the daily chart. Why do I have so many lines there? And you also have hidden bullish divergence or potential hidden bullish divergence on the daily chart, which pretty much means you're currently at a higher low on price and your negative momentum is going back towards green on a lower low of momentum. So the MACD does look good on DraftKings, but you fell under the neckline of a Head and Shoulders, which is bearish. I have so many lines here. So yeah, it's DraftKings. You're currently at a horizontal support. So who knows, maybe it could have a little bit of a bounce after dropping from $63 to $38 with divergence at a support zone. But then again, the stock market is blah. And I'm not saying the stock market cannot go up, I'm just saying the probability is not really on its side at all. It's like a 60-40 in favor of the bears. And that's DraftKings. Tesla fell out or is currently falling out of an ascending triangle, which is a bullish continuation pattern. And you could make hidden bullish divergence on your 4-hour, but too early to call that. Yeah, I mean, Tesla doesn't look too great, especially if you really start falling out of this ascending triangle. And then VSTO has been absolutely killing it. It's an ascending triangle, and it has or it had potential hidden bullish divergence that turned into confirmed hidden bullish divergence, and since then it's only gone up in price after the MACD crossover. Actually, there's a YouTuber called the Stock Watch 2, which I just started watching on YouTube, and he actually suggested this chart. I think they do like ammunition and like camping materials and stuff like that, but the chart itself looks good. You have a resistance at 24.91, and then if you break out the ascending triangle, the measured move is $28. This is obviously like a long-term trade. So that's VSTO. If anybody watching has any requests, just drop it in the chat. I'm just looking through a bunch of different charts currently. And AAL fell out of its long-term range that it's been holding for multiple months, but it is now back at another support. So I don't know. The airline industry is just so weird fundamentally right now. I was trading AAL. I bought it like 11 bucks, sold it at like 15 or something that earlier in the year, and then I was holding it and I lost like 5 or 6% and I got stopped out and I haven't touched it since. LCA or SU? I'm gonna look at LCA. I've been pretty much looking at it every day now. So, whoa, I'm actually impressed. With the type of day we had in the stock market, LCA is looking probably better than it did last night when I went over it. So you're currently in this 4-hour descending broadening wedge, and you're still holding the 1137 support, and your 4-hour MACD looks great. It looks ready to go back to green, so you want it to, and then you can have confirmed classic bullish divergence with the descending broadening wedge off of the support zone. So it has a good chance of breaking out. I would say a 70% probability for the bulls and 30% probability for the bears. Really looks good to bounce off of an area it really needs to bounce off of. Otherwise, there's nothing. So, yeah, I would say one thing to be careful of though is you just broke under the 200-day moving average. So hopefully, with the 2 times you bounced off the 1137 support I called, and with the classic bullish divergence, you can get back over that 200-day. For the MACD indicator, are you just looking at the lines or anything, or the histograms? I just pretty much look at the histograms. I know some people only use the lines, but Mitch Ray, who is another YouTuber that I pretty much learned all of this from, he pretty much just says the lines don't matter as much because as you can see, I'm trying to find a chart that just crossed over. I think that was VLDR. Yeah. As you can see, basically whenever your histogram turns to green is when you get a MACD crossover. You know what I'm saying? And then on the flip side, whenever it turns from green to red is when you get the opposite MACD crossover. So I know some people, instead of charting their MACD like how I did right there, some people actually chart it like this. You know what I'm saying? And I guess you can do that as well. I don't think it makes too much of a difference, but it's just not always the same in terms of how it looks. Like sometimes you just, especially when you get much closer level islands, like over here, it just looks a lot like this little area looks so different than these 2 very clear islands. So it just doesn't look as good in my opinion, but if people want to use it, good for them. You can do it either way, honestly. And then SU. I'm assuming you want Suncor energy. Very well under that 200-day moving average, but you've been under that since the March crash, or since February actually. No divergence on the 4-hour. You have bearish convergence on the daily, which is when the price and the oscillator do the same thing, and the price is going down and the MACD is going down. And you kind of even had some bearish divergence on your RSI because you went a little bit higher on your RSI. I mean, you had a double bottom, but it failed to play out, and now you're back down at that pretty much the same level. And in terms of support, you do have a support over here, If you go all the way back to 2004, you have support at this level, and then you can obviously also pair that with the recent swing low. So yeah, I guess you have a little support at 1128, but no divergence really. So it doesn't look great, if I'm being completely honest. I think this might just be one of those stocks that just follows the general stock market, if I'm being completely honest. But yeah, that is SU, and I think that'll wrap it up for the day. Pretty productive, good updates on Bitcoin and SPAQ, and then I went over a few charts. So if you support what I'm doing, make sure to hit that subscribe button. If you want live updates, follow me on Twitter. They are both over there on that little bottom panel, so check me out there. And thank you all for coming out. Thank you for the support, and I will see you guys tomorrow at 9:30 EST. So until then, trade safely and have a good night.